first of all, Tesla, as you can see here, after market, they did fall actually more than 3% at one point, down about 2.5% though in the end. And what actually happened here? Well, they reported Q1 2021 adjusted EPS at 93 cents. Analysts were expecting 79. Revenues were a slight beat, 10.39 billion against 10.29 billion. Their free cash flow also positive, nearly $300 million against street estimates of a negative 83 million. A couple of comments that I think were quite interesting. The company expects this year's volume growth to exceed 50%, while saying that it's on track to start production deliveries at its planned factories in Texas and Berlin this year. They delivered a record 184,800 vehicles globally in Q1. That beat market expectations, particularly strong demand from China. But the company did not offer a specific estimate for vehicle deliveries for this year, and that was something that a lot of people were looking for in terms of the details of how does the year plan out, how confident are they about that. Some other interesting points, although the actual nominal value is fairly insignificant overall, they did actually generate $101 million in income after selling about 10% of their Bitcoin holdings. And we can have a look at the Tesla chart in a second. Actually, profit from Bitcoin, regulatory credits, and tax benefits contributed overall to about 25 cents to Tesla's adjusted earnings of 93 cents, to give you a bit of context there about how they generate their general earnings. So look, let's have a quick look at Tesla shares, because pretty modest and actually relatively well contained, all things being equal, compared to the usual price swings that we see after earnings. This is actually looking at Tesla shares. I mean, if we go back to where we were, in August or November, I think it was around that November time when a few months back when Tesla originally was getting involved in Bitcoin. So you can see, going back to where we were trading in Bitcoin at the time, the rationale for why they made a bit of money on the back of that. But more importantly, I think, is their Q1 earnings were just absolutely sensational. And so these numbers were a beat on the top and bottom line, but it's just not enough really to keep what is otherwise an incredibly elevated share price. So if anything, I think these numbers were okay. It's just the fact that they're kind of subject to just how great the share price has been, that if it doesn't follow up with that Q1 stellar performance and really smashes it, knocks it out the park, then markets just come off a tiny bit. But as I said, for Tesla, this isn't like a normal company in terms of its daily price fluctuations. That's relatively contained. And I've put a couple of markups here. That was when Cathie Wood's ARK investment fund sold some of the shares that came at quite a technically strategic point at around 780, which was, as you can see here, there's previous areas of support we had through late Jan and mid-February. But the rectangle here is what the indicative price is then for the market to reopen, just given those aftermarket earnings. As you can see, for me, that's within the kind of more positive side of what is quite a key technical level at around 708. They're trading about 719 in post-market trade. And the reason why I like 708 as support is because of that area of resistance turn support as well that it's had for the price action over the last 7-8 weeks. So overall, it's worth bearing in mind that Tesla's seen a price swing from the initial Q1 earnings report of up at $900 to a low that we saw at beginning of March. We've had a 40% swing in price, and we're about midpoint of where we are at this point in time here for Tesla. So a bit of context, I think, quite important. But overall, they've survived this earnings release unscathed as far as their share price is concerned, I would say. But a couple of other things to have a look at. The earnings theme, we've also had HSBC come out overnight, and of course they are listed in Hong Kong, and that's a good indicative way of looking at how investors perceive their earnings, and they were up about 2.7%, so a positive reaction to their earnings release. Their main figure was their adjusted pre-tax profits, came out at 6.39 billion. That was a firm beat on expectations of 4.3 billion on the street. Their Revenues were 13.27 billion against expected 12.68 billion. Profit advances in all the bank's major business areas for HSBC, so keep an eye out for them when they open up on the FTSE today. There's a few other earnings. I mean, I'm filming this fairly early, so still haven't seen the numbers yet. You've got the likes of BP coming out today. You've also got Novartis, UBS as well, all coming out ahead of the open, so just to be aware of. That we're anticipating to see with US growth going to be in excess possibly of 6.5% QO growth that we'll see on Thursday. And that's it. So any comments at all, just let me know. Drop a comment on this video if you're watching this on YouTube, delayed. Otherwise, for the guys in Amplify Live, hope that was useful, and I'll see you in the chat room. All right, guys, have a good day.